This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel. And emotions are running high. A lot of people are fearful. A lot of people are doubtful. A lot of people are scared. A lot of people are lashing out. But the reality is, these kind of corrections occur twice a year. The stock market, I don't think, is barely down 10% at the moment. We'll check in a minute. During these volatility events, we expose those types of people that are really just speculators or gamblers. Everyone is a genius in a bull market, but it's when risk happens and risk happens fast that we get to check ourselves and find out whether or not we really are a trader and can rightfully call ourselves a trader versus somebody that is just gambling and speculating, and as soon as volatility shows up, they get totally wrecked. The unfortunate truth of the matter is most people are the latter, but the good news is we can use this volatility event to fix any holes in our system. If we're newer, then everyone makes mistakes initially, and if you've been doing the same mistakes over and over and over again, then, until you learn to stop doing that, these volatility events, which occur every 2 years, are going to keep crushing you. So right now, the market is giving us a masterclass in a couple of expressions that are favorites of mine, okay, old adages. The first one is, when the whorehouse is raided, everyone is arrested, including the piano player, which is kind of a weird way of saying in crashes, correlations tend to 1. Or put in an even more simple way, when fear and panic shows up in the markets, everything goes down, regardless of whether it makes sense, regardless of whether the valuations are not fair. Why is the dollar going down with everything else? This is just what happens. When volatility shows up, everyone gets arrested. Doesn't matter whether you're guilty or just the piano player, right? And so that's what we've got going on at the moment. But it is important to point out, for the S&P 500, we're down top to bottom just under 10%, which is a correction, right? 10% for a correction, 20% for a bear market in the stocks. Now, ignoring all my scribbles and annotations, we can see that this kind of thing occurs once every 6 months, roughly speaking, okay? The yen carry trade unwind was about 10%. This correction back here was 10%. And I've often said, if you think about April and October for a correction, you won't be far off, okay? So I'll just scroll back anywhere randomly. We'll use this. Right around October, we made a low and off we go. And I guarantee you by the time we get to about April, which is here, okay, you can see this time it occurred slightly later, okay? But then we go forward to October again. Okay, this time it was November. Again, allow a month's wiggle room. There's April. Again, another correction into April. There's October, forming a major low in October. There's the April low, August, and October. Okay, October low. I guarantee there'll be another one somewhere around April. Okay, there's April. So we made one slightly early in March back here. You get the point, okay? Generally speaking, every 6 months, around, let's say, March to April and around September, October-ish, we will get a low in the stock market. Generally speaking, that's just what tends to happen. So right now, we're experiencing this in March, but generally speaking, again, this is just normal weekly cycle low things, okay? We form one of these corrective periods every 6 months, roughly speaking. But the important thing to understand here is that this volatility exposes all of our bad habits, if we've got any, okay? If you've paid a couple of stops and you haven't blown chunks out of your account, happy days. But if you're now down, when the S&P is down 10%, if you're now down 60% in your stock portfolio, you're doing something wrong. So it's important to use these times of volatility to do some self-reflection. And you have to make sure you learn from any mistakes you might be making now, because again, we're going to have the same rodeo show up in 6 months' time. We'll get to that roughly speaking October timeframe, and all of this stuff's going to happen all over again, right? And then again around April next year, and then again around October of next year. So we've got to learn to fix our mistakes. This is also a perfect time to illustrate my favorite saying in trading, which is, everyone wants to be a trader until it's time to do trader stuff, okay? Let me say it one more time. Everyone wants to be a trader until it's time to do trader stuff. And this is where the real experience and alpha comes in today. This is what I can really, really help you with. Because number one, we know we've got to manage risk, okay? But do you actually do it? Do you actually limit yourself to 2% per trade as a max? Because if you don't, remember, max drawdown equals your average stop times 10. So if you're trading with 2% maximum, your maximum drawdown, of course, is 20%. But if we just increase this to 5%, then your maximum drawdown is, of course, 50%. If this is 10%, then you are at risk of blowing up your account. So we must manage risk. This is the first thing. And we must do it every single time. If you say, okay, I'm going to make 3 trades in a row with 2%, okay, but then on your 4th go round, you decide, oh, I'm actually really good at this, I know what I'm doing, let's go to 15%. Well, what's your average now? No way close to 2 anymore, and thus your max drawdown is significantly higher than 20%. So this is the first thing, okay? Don't get mad at yourself, don't beat yourself up. If you're not managing risk, start to manage risk, start to internalize the mathematical importance of sticking to a risk management strategy. The next thing I see is people getting frustrated with having to pay 2 or 3 stops in a row. I can see this across the board. People go, oh my gosh, another stop, right? But the analogy to use here is the coin toss. Again, it's important to remember the difference between a trader, which is a very boring individual that sticks to a strategy, has a mathematical edge, and then does not care about what happens in the short term because they think long term by repeating their edge over enough repetitions to extract money from the markets over time. There's a big difference between those people and speculators, gamblers, people that just have all the answers, people that think they know something. And again, when these volatility events show up, we can immediately identify who the gamblers and speculators are, okay? Because if you, for example, flipped a coin 3 times and you got heads 3 times in a row, would you conclude the coin was broken? Would you say we need a new coin? We need a new strategy. This isn't working, right? Would you conclude the market makers are hunting for heads and not permitting you to have a tails, right? But of course not. You know the coin is fair. You know 50% of the time it's going to throw heads and 50% tails. And here's the key thing. From time to time, you're going to get multiple heads in a row and multiple tails in a row. But again, you can always tell who the gamblers and speculators are because they pay 2 or 3 stops in a row and they go, that's it, the system's broken, I knew cycles were LARPing, I knew this, that, or whatever the excuse is, right? But the reality is, if you've got an edge, you have to let this thing mathematically work in your favor over enough repetitions. We can't be looking at January and February and saying, well, we paid a couple of stops, so cycles must have broken, and totally discount the fact they've been working flawlessly all the way through the bull market for the prior 2.5 years. Again, another kind of similar analogy here would be, imagine if you've got a roulette table and you own the casino, or you own the roulette table. If a punter comes in and bets red, and red comes up 3 times in a row, do you conclude we need a new roulette table? This strategy's not working, right? No, of course not. What do? You just allow the punters to keep playing the game. You allow enough repetitions of that roulette wheel so that over time, the fact that you've got 1 green 0 in there gives you a mathematical edge, which allows you to siphon off gains. And we all know that expression, the house always wins. Why? Because the mathematics are stacked in the house's favor. The odds are in their favor, and all they've got to do is allow enough time and repetitions to siphon off the gains. Trading is no different. Now, I know a lot of us are testosterone-filled men with giant egos, and we love to swing our tails around, right? And we love to pretend like we're the next Michael Burry. But the reality is, that's not what a trader looks like. Traders are incredibly boring, autistic, quiet, reclusive individuals, okay? They have a system and they stick to the system. You're not out here being the next Michael Burry, shorting something, being ultra contrarian. All we are is a guy that routinely bets a maximum of 2% per trade, has a cycle strategy that allows us, okay, over enough repetitions to extract money from the markets, and the rest of the time, everything is extremely boring, okay? No one is going into a bar and picking up chicks with, oh, what do you do for a living? I've got a mathematical edge, cycles, I count the days and I apply 2% per trade and I can extract money, I can siphon it off from the market over time. Like, you're getting no puss with this, bro, okay? None whatsoever, because you're a boring little risk manager. That's what it is, okay? And I know we all like to call ourselves the next Michael Burry. We all like to think we're contrarian, okay? But the reality is, most of us are so anti-contrarian. What's the opposite of contrarian? With the herd? I don't know the word, okay? But most of us are such sheep in our approach that we can't even contemplate going long out of this cycle low. Okay, most of us are so bad at being contrarian, we think that long here is malpractice. We think that this is ludicrous. We think that we should have been calling the tops already by now, when in fact, there is loads and loads and loads of time left, loads of time to get out. There will be counter trend moves to the upside, and there might even still be more highs left in this thing. But again, you know, we all think we're Michael Burry and we're going to short the top, but the reality is, you're not even contrarian enough to be able to say, objectively speaking, I don't mind risking another stop here and sticking to my cycle system. We have to ask ourselves the question, are we doing anything differently here? Are we doing anything wrong? Okay, what have we been doing the entire way up? We've been counting the days, waiting for a cycle low and going long out of the cycle low with a stop below the low. That's what we've been doing. So if we haven't been doing anything wrong and we have still been managing risk and we've still been sticking to the system, then we can hold our hands up and say, I'm a trader, right? I'm doing my job. I'm exercising discipline, I'm managing risk, I'm sticking to my system. I'm not allowing emotion to come in here and tell me I need to be calling tops here, or I need to be in any kind of rush. In fact, let me show you how much of a rush we're not in right now. This is exactly what we saw in 2022, and there was weeks to get out near the top. Right now, if I call the top, like I know a lot of you are trying to force me to do, a lot of you are in my comments saying, you need to call it already, you're already late, okay? Let me show you how not late we are with this fractal from back here. So I'm going to grab this from 2022. We've dragged this over here. Look, there's still loads of time for a counter trend bounce. This is in the worst case scenario to a lower high, okay? But right now, if I call the top and panic sell everything, then we miss the top by 10%. With a counter trend bounce that is bound to be coming out of this daily cycle low, we might miss the top by just 3 or 4%. Okay, so I'm in no rush here. You can also see in 2022, we got a secondary opportunity to get out here even closer to the top. So we can play a contrarian cycle low trade here. We can also draw this here, okay, and play another trade later in life. And then we can still draw this in here and say, okay, if this cycle fails or this cycle fails, then we can say, let's call a top, let's call a trend change, okay? And ultimately, what would we have done? We would have got in close enough to the bottom to call it the bottom and close enough to call it the top to call it the top. There's absolutely no rush here. This peak would be all the way in May, okay? So again, I know you want to call the top here, and that's fine, you can, but don't try to tell me to deviate from my strategy. I've made it so clear. Third angle violation, second angle violation, confirmation via failed daily cycle. Until I get failed daily cycles, I can't confirm the top is in, and there might still be loads of opportunity, number one, to get out even closer to the top, and number two, what if this isn't the top? Right? What if actually what comes next is that was the weekly cycle low and we're going to resolve to new highs? Well, then you can bet dimes to donuts. I want to be long here in case we are about to go parabolic into new all-time highs. And although it seems really bearish and although it seems like everyone's got the answers right now, nobody actually knows, okay? And it's not my job to know. I don't care. My job is to trade the cycles. And if this is a real cycle low, then of course I want to be long there because I want to be long out of every single cycle low because over time, with a risk management strategy, I can allow this edge to siphon money out of the system, right? That's my goal. It's not cool. It's not noble stuff. I'm certainly not picking up any chicks in the bar with this, but I can allow myself to get underneath some cycle lows and take money from the market over time. Most of these work out. Yes, from time to time, we have to pay some stops. But again, most of the time, they work out. And in case this is the top, right, in case what we're about to do is a repeat of this, well, you can go back and see what happened on the channel back here. We used this lower high to say, that is it for sure. This one right here, we set this trend line and we said, that's it for sure, okay? Until we break out of here, there's no bull market. We also played the cycle lows, making a couple of adjustments. And again, you can go and see this. I had the channel during the time. There's only two adjustments we make. One is we expect the lows to come slightly earlier on the left-hand side of the window. And two is we take profit sooner. That's it. But these counter trend rallies, you know, we were catching all of them on the way down. And we did this live in front of everyone. And every time when we made a lower high into resistance, followed by a trend line breakdown, something like this, okay? I said, give me my money, I'm exiting, and we wait. And we waited and waited and waited until eventually we broke out here and we got long. And then from there, it was plain sailing, right? We caught nearly all of this move better than everyone, frankly. And again, people are here trying to be like, you need to call the top, right? If you want to call the top, call the top. If you want to go short, short, right? But I'm sticking to my system because I'm actually a trader. This is what I do. I don't care if we take a few stops in a row because again, I'm not calling the coin broken just because heads came up 3 times in a row, right? I stick to this. I allow the repetitions. I allow the money to be siphoned off. I'm about to go long here, even though everyone thinks this is crazy. Everyone thinks I should be calling the top, right? Are you really contrarian? Are you really able to buy the dip when everyone wants to call a top here? So again, I'm going to keep doing me. I'm going to keep sticking to the system. As I showed you with a fractal, if something like this is coming, then there's still absolutely no rush here, okay? Which is a better exit right now, 10% down or 3% from all-time highs? I'm going to take my time. There's still some upside left here. And of course, there's always the outside chance that we're about to see new highs because that's a weekly cycle low. Now, down here, you can see the distance between this weekly cycle low where my cursor is and this one was only 77 bars. Okay, this is 16 weeks, which is a shorter cycle, very, very early on. But now, if this is a weekly cycle low, remember that rule, shorter cycles are followed by longer cycles and longer cycles are followed by shorter cycles. And then the average between the two works out perfect, just like it suggests down the bottom here. Whilst I was originally thinking this is a weekly cycle low, there's always a chance that I was premature in calling this a low. This is the real weekly cycle. This restores the averages after having a short cycle. And if that's the case, then this is just your run-of-the-mill April and October correction of 10% that happens twice a year, as I said, and should resolve to new all-time highs. So amongst the sea of doom posting and fear-mongering and everything that's going on out there and people getting really upset about paying a few stops, this might just be one of the best buying opportunities that we're going to see for 6 months. This might just be the final hurrah into the final high of this cycle. That might actually be what's the case. And if that's the case, do I want to be panic selling here and calling the top and doubting my system or changing my strategy just because some people are upset? No, I don't think so, okay? I'm going to keep doing me, I'm going to stick to the system, and over time I'm going to let that roulette wheel spin enough times so that the house always wins. And practically everything I said here still kind of applies to Bitcoin as well, right? So far, this does not look good. But also so far, we have yet to be stopped out. So we haven't really got anything I can be too concerned about, right? The stop has been there the whole time. You know the stop level. It's been public. Now, on a balance of probabilities, it looks like it's going to be stopped out, I'll be honest. But all of this reminds me of back here. Exactly what I've just been saying about the stock market applied to Bitcoin back here. Back here, we were paying a couple of stops and people were getting really upset. Oh, the cycles must be broken, or the cycles must be changing, this, that, and the other. And we, with Bitcoin, got this incredibly rare setup where we had a half cycle inversion followed by a second half cycle inversion. Super weird, right? Super rare. Inversions are rare by themselves, but to get a double inversion like this, incredibly rare. And in here, I've made this case loads of times, but it's super important. I got long and I said to the members, it feels horrible. I've got to have zero tolerance, right? But I'm sticking to my system. And this enabled us to catch the upside pump, right? We added on this cycle low and the whole lot was taken out for about a 70% profit on this wick back here to 89k. But that meant we caught all of this move. So the only way we catch the move is by sticking to the system. If I'd have allowed the bearish sentiment back here and all of the doom posters and all of the people that were telling me you need to call a top, right, you missed the top, oh, blah, 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 cycles don't work anymore. If I'd have listened to those people, we wouldn't have been able to catch the weekly cycle pump. And it's the same deal here. I hope that this doesn't fail. I hope that this now resolves up. That would make my life easier to deal with. But there's always the chance that instead of the current count we've got going on here, right, my green arrows, it's always a chance that this is the count, okay, from that wick. And then we can project forward in time. And if that's the case, today's 57, which means we could see a low anytime in the next few sessions, which again would align perfectly with that stock market daily cycle low, which is also potentially going to see the weekly cycle low move to here, okay? With the indicator turned on, you can see we're right in the middle of that perfect future expected timing low window to see a bounce here for the stock market, and all on record bearish sentiment with a bunch of people incredibly sure of themselves that cycles don't work anymore, that the market has topped, and that there's absolutely no possible way this thing can rip higher. So the last thing I want to say about this before I show you what's coming up this week, because potentially we've got massive catalysts, okay? I think it's important to point at this. As a trader, you have to push your system to the limits until you're invalidated. No matter what your intuition is saying, that's true of emotions. Doesn't matter what your emotions are saying, nothing matters. It's worth paying a stop or two to find out. This is absolutely right, okay? And the reason this is exactly correct is you never know which trades are going to be stopped versus which ones will succeed. Back here, it felt like this trade was certain to succeed and it was stopped. Then here, it felt like this trade was certain to lose and it resulted in catching this pump. Right here, it feels like this trade is certain to lose. And if it gets stopped, it might feel very uncomfortable to try to re-enter a few days later and perhaps adjust the count to here from here where we had it originally. That might feel incredibly hard. That might be an incredibly contrarian thing to do. But unless the weekly cycles are about to fully break down, unless all those whales that have been buying recently are totally wrong, and unless this 106-day cycle count is also about to be wrong, then on a balance of probabilities, is it not worth paying a small stop to find out? Just in case we are about to moon to 150k and beyond. So you can see I'm not doing anything differently at all. I'm going to continue to trade the cycle lows. I'm going to continue to push the system till the limits. And eventually, if we get a true trend change, if my system confirms via failed daily cycles and failed weekly cycles that the market has truly topped, then we will easily be able to get out with plenty of time and in no rush, close enough to the top to call it the top. And as I said before, but it is super important, we already have a proven track record on this channel of playing the fades on the way down. We did better than anyone and we called the bottom, right? We got long at the lows, confirmed it with a trend line break, okay? So there's no reason to be upset here. We're just going to continue to extract the money, continue to stick to the system, and most importantly, continue to manage risk, okay? And I know I'm repeating myself, but it is important. If you think you are a contrarian person, if you think it's easy to go against the herd, then you better be going long out of this daily cycle low. Because if you're not, then you're with the herd, right? This is just the reality, and that's fine. If you want to sit out of this trade, I'm not telling anyone they should be long here or they should, I'm just going to do me as always. But I'm going long out of this cycle low, and I tend to be much more contrarian when it matters. The herd can be right in the middle for a long time, but at inflection points, when it matters, I tend to be very against the grain. I believe that's the case now, because me telling you this is probably a weekly cycle low that resolves to new highs, many people right now are not having it. For me telling you that I would not at all be surprised if we undo all of this correction in 2 or 3 daily candles, most people would laugh at. Okay, but again, I said the same thing at the prior weekly cycle lows. I don't see why this time is that different. Maybe it takes 1 or 2 stabs for sure. Okay, but that's fine. We'll stick to the system. We'll let the stops do the worrying as always. And we've also got this circulating at the moment. Oh, Trump is crashing the market to try to force the Fed to cut rates because it doesn't want to refinance the debt, right? But this is how ridiculous the current setup is. Markets are driving people insane here. People have taken leave of their senses. It's absolutely nothing personal to this guy because there's loads and loads of people posting the same thing yesterday. But just remember, markets have short memories, camels do not. It was only a few weeks ago, everyone was talking about how tariffs are inflationary. Camel, you're wrong about inflation going down. You're wrong about the resumption of disinflation. This was the narrative just a couple of weeks back. Inflation is going to be persistent and sticky because tariffs are inflationary. And now, just a couple of weeks later, it's Trump is crashing the markets. Well, I thought 2 weeks ago, Trump was going to drive inflationary pressures and that was going to force risk assets higher, right? As a function of fiat debasement. And now all of a sudden Trump's deliberately trying to tank the stock market. I mean, these people are just making stuff up as they go along. No one's got a clue. The reality is nothing has changed. Tariffs were never inflationary. They're much more like a one-time tax. We've been here, we've done that. I'm not going there again. We know that disinflation is real, right? We've invalidated everyone that said sticky inflation in the past couple of weeks. And realistically, is Trump actually crashing the markets? Or is this a daily and weekly cycle low, right? On a balance of probabilities. This has nothing to do with Trump. So you know me, I love a conspiracy. I love a tinfoil hat. But to say Trump is crashing the markets, I mean, I want what you're smoking. I really do. Now, this week is going to be really big. Today, we've got jobs data coming out. Now, at the moment, the narrative is all of this is recession fears, okay? Markets are puking on recession fears. So if we get jobs missing, then it's going to largely speak and confirm that recession fears are somewhat justified. But if they can just manipulate this data one more time, just like they've been doing every print, okay, if this comes in and is not at all recessionary, the market is going to go, yes, no need to worry, okay, we can all relax, everyone can chill out. And on a balance of probabilities, because of where the cycles are bottoming, we know that the path of least resistance here is to the upside. We know the price is in a spot to move to the upside, and because the cycles are bottoming, any news that comes out this week is likely to be received and painted in a bullish context. And then, of course, on Wednesday, we've got CPI. What do we know about this CPI print? We know, okay, that inflation is dropping like a stone. We know that. Hard right edge here. So yes, we might get one final semi-sticky print because the Fed is months behind the curve or a month behind this, and this thing updates in real time. But most probably we're getting a cold print. And also most probably the month afterward is going to be extremely cold, the month after and the month after that. Why is that so significant? Because the Fed is overly restrictive in its interest rate policy. But what happens to the probability of remaining paused when we get a very surprisingly cold CPI print? Of course, it shifts to the left-hand side. We start to put cuts on the table. Suddenly the market can say, okay, easing is coming. Okay, we're not going to be as overly restrictive as we are currently. All of this should align nicely with the ability to get some relief in the worst case to a lower high, okay? And in the best case, a resumption of the bull market to new all-time highs. Then we've got more jobless data, more inflation data on Thursday, and consumer sentiment on Friday. So this could easily resolve to the downside, confirm recession and all of that jazz. But on a balance of probabilities, because the cycles are bottoming, it seems to me at least, we've got a shot here. We have got a shot, and thus I'm going to continue to do what we always do, which is find the lows and trade them until they start to truly fail and reverse trend. I have absolutely no idea what will happen, okay? Nobody does. But all it will take is for Bitcoin to hit 95k in the next few days, and that will be all I need to see to be extremely confident we're going all the way to 150k and beyond. If we can trade up here and break out of this downward slope in red right here, like, that level currently sits at about 92k. That's all it will take, okay? And that for me will be 100% confirmed. We found the daily and the weekly cycle low. We've tracked everyone. The sentiment was extreme. We made it all the way down to fear and panic. on the Fear and Greed Index and FOMO Finder. And by the time we get here, okay, we will have recovered the third angle, set the traps, we would have broken market structure, and we'd be on our way to what I believe will be a 100% pump off of that lowest low, which is around 160k for the target. That's all it will take, and Bitcoin can do this in one candle. Keep in mind, we will probably get a lower CPI print, we'll probably see rate cuts put back on the table, if not for March, for the next FOMC, and that's all it's going to take. One big green candle, and everyone will be like, no, I'm locked out, I need to chase this thing, there's loads of short liquidations that will occur. We could do it in 3.5k candles, right? Bitcoin can do this in its sleep, and that's all it's going to take. A 10k move to the upside, and we will officially be in a bullish structure, according to me, and targeting 150k and beyond. Bitcoin can and will do Bitcoin things, and until such time as it proves to us otherwise, then again, I see no reason to doubt it. Now, does it feel good? No. But that's exactly what we would want into a weekly cycle low. It's not supposed to feel good long in a weekly cycle low when we've fully flushed and reset sentiment after the prior pump, which was over 100%. And again, of note, whilst the stocks are not playing ball here, the prior weekly cycle low was short, as I said earlier. The shorter cycles are typically followed by longer cycles, so the average lands where it's supposed to. And if this is indeed the weekly cycle, the balance will have been restored after this shorter cycle here. And notice that the stock market weekly cycle would also be coinciding with Bitcoin's weekly cycle. I think the stars are potentially aligned here. Now, again, nobody knows. I'm not pretending to know. And it won't take much here for me to, of course, confirm my top signal and call the top officially. All it will need to see is a bounce to a lower high and a rollover and fail, and that's it. I call the top. I've made this so clear over and over and over and over again. I've been saying the exact same thing. That's all it will take. In fact, by the time we get a lower high and start to roll over, I would imagine I'm moving stops to break even in this neighborhood. I would imagine I'm starting to get out and perform damage control in here. So it won't take much, right? We really are on a knife edge here. But I think on a balance of probabilities, you're going to see the contrarian do contrarian things. You're going to see me get long, and you're going to see me hope for new all-time highs. And if the market proves to us something else, then we'll adjust to that as always. Do you really think Bitcoin is truly over? Is that it, right? Was that the top? I don't think so. I don't think it makes sense. We didn't really get any of the top signals show up apart from some narrative, right? And Trump doing a meme coin. But in terms of the on-chain metrics and all those traditional top signals, none of them fired. None of them came close. So I think on a balance of probabilities, we probably can move higher from here. And this is just a weekly cycle low resetting and flushing sentiment. Again, it's not going to take much. We're up 3.8% at the time of recording. Now, of course, by the time this video is uploaded, we could be back trading at new lows. But equally, by the time we get the lower CPI print on Tuesday, we could be at 94k, and that's it. I am 100% confident that we've got bullish market structure, the weekly cycle lows in, and we're going to Valhalla. So don't give up, right? Don't give up just yet. Stick with it. Understand that we got to keep doing the same things over and over again, and that so long as we can do that, over time, we can win against the market. It's also, and I know people don't like this account, but it is what it is, incredibly similar to the 2017 structure. Now, granted, this is not even really accurate because 850 days from the low, but for some reason, this starts back from the low. Here's the low right there. And for some reason, it starts back here. So I guess, I don't know why we couldn't have told the truth about this structure, but whatever, right? The thing that I like about this is, for anyone that's familiar with Livermore's speculative funnel, right? 1, 2, 3, 4, 5, 6, parabolic. And if you don't know what I'm talking about, Livermore, here it is, right? Livermore's speculative funnel. You get this 1, 2, 3, 4, 5, 6, 7, and then off we go. And I think it could well be this 1, 2, 3, 4, 5, 6, 7, and then off we go, right? I really think that's what we could be doing here. And I know it sounds crazy. And again, you don't have to believe me. You don't have to take my word for it. But also, if I'm taking the risk here, if I'm putting both my reputation online and my capital, getting long out of this weekly cycle low, and then it happens, okay, don't come here and tell me I'm lucky, okay? Because, again, we're just sticking to the system. That's what the system is for. So in summation, I know everything seems doom and gloom out there. I appreciate that, okay? But for me, at least, this should resolve to at least a counter trend bounce to a lower high here in the worst case scenario. And I want to be a part of that just in case. Gold is kind of holding up for now, at least, so we'll see if it can get a push, and the same is true of silver. Bitcoin continues to move up, okay? 3.8%. Let's see. I certainly don't want to say that's it, the bottom's in, because nobody knows, right? But again, you know how I feel. I think the cycles are bottoming. I think we should get a breakout in the not too distant future, and I think I want to be a part of that. Watch for the yields to react to the unemployment data and the inflation data. Watch for that to happen because, again, we'll be able to tell that to the bond market. The lower the yields come off, the more likely we're going to see the repricing in rates. Watch for the Dixie to get some kind of counter trend bounce, weekly cycle low, and then a reversal. And other than that, I'm your boy Camel. I hope you found value here today. I hope you can stay the course. And I hope, most importantly, you can use the volatility as an opportunity to find any holes in your system. If you're taking losses that are too big, okay, fix it. That's okay. Just don't keep doing it. If you are jumping strategies and you were a cycle trader and now you're not convinced you want to be a breakout trader or a MACD cross guy, okay, it doesn't matter what system you're using. Just back test it, make sure it works, and then stick with it, okay? Don't keep doubting the system. Don't flip a coin, see 3 heads, and say to yourself, well, the coin must be broken, right? Allow enough repetitions for the system to work in your favor. And most importantly, don't allow your emotions to guide you into calling tops and panic selling the lows. Okay, as I showed you with that fractal in the S&P, there's loads and loads and loads of time to react. We haven't got to be in any kind of rush here. We haven't confirmed my top call signal. And the moment we do, if we are to do it, I will of course update you. I'll let you know. But for now, I can't possibly call the top. Unfortunately, I got to go long. I don't like it, but the system is the system. And we'll see, right? For all we know, we're going to be jumping up and down, punching our fists in the air with 150k Bitcoin in a number of weeks. All right, 6, 7, 8 weeks time, and we're going to be at 150k. For all we know, that is possible. So as ever, one day at a time, no emotion, no bias, and we will see what the market can give. Trade safe. Love you all. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us normies